Home ownership and taxes, what you can actually write off in Ontario. So let's talk about taxes and more specifically how being a homeowner in Ontario can help you keep more of your money if you know what to look for. Now, I'll be honest, taxes aren't exactly the sexiest topic, but they're a critical part of home ownership that people overlook. If you're not aware of the tax benefits available to you, you could be leaving thousands of dollars on the table every year. In this video, we're going to talk about how owning a home in Ontario can impact your taxes, what deductions you might be eligible for, especially if you're self employed, and how to approach this whole thing strategically, not just at tax time, but all year round. Why owning a home can be tax smart. First, let's just acknowledge this. Buying a home is a major financial commitment, especially in a market like Ontario's. But the flip side to that is it can also open up some really meaningful financial advantages, particularly when it comes to your taxes. Unlike renting, home ownership allows you to potentially tap into capital gains exemptions, deductions for home-based businesses, credits for renovations, and rebates that are only available if you own. In other words, yes, it costs money to own, but you can often recover some of those costs through smart tax planning, especially when you understand how the system works. Let's start with the big one, the primary residence capital gains exemption. If you own and later sell your home, and it's been your principal residence for every year you've owned it, you don't pay tax on the profit. That's huge. Say you bought a home for $600,000, lived in it for 10 years, and sold it for $950,000. That $350,000 gain, it's completely tax-free as long as you designate it as your principal residence. Now, if you've got a second property, a cottage for example, that's where it gets trickier because only one property can be designated per year. But this exemption alone makes owning property one of the most tax efficient ways to build wealth in Canada. Home office write offs for the self employed. Now, let's talk about one of the most overlooked areas, home office deductions. If you're self employed or run a business from your home, you may be eligible to write off a portion of your housing costs. Things like utilities, property taxes, mortgage interest. Not the full mortgage, only the interest portion. Home insurance, repairs, and maintenance related to the office space. You could calculate this based on square footage. So if your home office takes up 10% of your home, you could deduct a 10% of those eligible expenses against your business income. I want to emphasize this needs to be reasonable and clearly documented. CRA is very specific about what qualifies, and it has to be a space used exclusively for business. For salaried employees working from home, your options are more limited, but there are still some deductions available, especially if your employer requires you to work from home and provides a T2200 form. Another area where homeowners in Ontario can benefit is through renovation credits, especially one tied to energy efficiency. The Canada Greener Homes Grant, for example, offers rebates for upgrading windows, insulation, heat pumps, and more. Some of these rebates are stackable with Ontario-specific programs depending on your municipality. Now, these aren't technically tax write-offs in traditional sense, but they do function like tax savings by putting money back into your pocket. And some of the upgrades you make for efficiency can still qualify as deductions if they're connected to a home office or rental suite. If you're building a basement apartment, for example, some of those construction costs may be deducted or depreciated if that suite generates rental income, rental properties, and claiming expenses. For those of you who own a rental property, whether it's a legal basement suite or a completely separate unit, the tax world opens up even more. You can deduct things like mortgage interest, again, just the interest portion, property taxes, utilities if you cover them, repairs and maintenance, advertising for tenants, insurance, depreciation, or what the CRA calls capital cost allowance. But here's where strategy comes in. You want to be careful with depreciation. Yes, it lowers your tax income now. But when you sell the property, it can create what's called recapture, meaning you might owe more tax later. So it's not a bad thing. It just has to be a part of the overall game plan. Final thoughts. the strategic homeowner mindset. Here's the thing, homeownership is not just about building equity, it's about building advantage. And the tax side of homeownership is often where people leave money on the table. Whether you're a salaried employee, a business owner, a landlord, or just someone planning ahead, the key is to keep good records, understand what applies to you, and build a team that helps you make these decisions with clarity. So, yes, owning a home in Ontario comes with costs, but it also comes with opportunities to get some of those dollars back. If you've been wondering what applies to your situation, or if you're thinking about buying this year and want to understand the tax side before you close, let's connect. The earlier we build a plan, the better the outcome. If you haven't done so already, remember to hit the subscribe button and turn on those notifications so you don't miss any of my videos.